Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. They said it would never matter. They labeled it the underdog crypto, always overshadowed, always doubted. But then things changed. One morning, I got a notification. XRP futures were officially trading on the CME. That was the moment I leaned forward because futures mean institutional capital. Futures mean regulated exposure. Futures mean someone is willing to bet big, without owning the coin itself. And that's not all. Ripple, the company behind XRP, has applied for a national trust bank charter in the U.S., seeking to operate under federal oversight. Combine those two moves, regulated derivatives plus banking ambitions, and you get a turning point. This is the story of how a crypto many ignored is quietly becoming a major player. Before we rush ahead, let me rewind. Because to really see how big this is, you have to understand where XRP came from, how it survived, and why what's happening now matters. XRP's narrative's woven through both innovation and controversy. Back when Bitcoin was the rebel and Ethereum was the innovator, Ripple pitched a different vision: fast, low cost, institutional grade cross-border settlement. They aim not to replace Bitcoin, but to partner with banks to help them move money more efficiently. That positioning earned plenty of scorn. Critics called XRP a banker's crypto. They said it lacked decentralization. They said that the legal risk would kill it. Then came the SEC lawsuit in 2020. Ripple was accused of selling unregistered securities. The industry watched closely. XRP's price and reputation took a hit. Many wrote it off entirely. But here's the thing. While others sold, Ripple doubled down on enterprise, payment corridors, and regulatory dialogue. They kept building because for all the noise, they believed the world would eventually need what they were inventing. The lawsuit moment was a test. XRP had to survive it, legally, financially, and reputationally. Over the years, Ripple pursued licensing, clients, and partnerships in markets outside the U.S. They focused on remittance, corridors, bank pilots, and cross-border liquidity. They didn't abandon the U.S., but they diversified. Then in 2025, something shifted. On May 19, 2025, XRP futures officially launched on the CME. That meant U.S. institutions could now access XRP price movements through regulated derivatives without holding the token directly. The demand was immediate. The trading volume grew. Open interest climbed. Analysts noted that XRP futures were hitting significant milestones faster than many had expected. This was no small event. It was a structural shift, a bridge between speculative crypto markets and regulated financial infrastructure. So now we're entering the territory where signals start aligning, where institutional whispers turn into moves, and where speculation becomes plausible. Institutional interest and whale accumulation. While precise data is hard to verify in real time, on-chain reporting shows that large wallets, 10 million to 100 million XRP, have been adding to their holdings. That kind of accumulation often precedes major catalysts. We should treat this as plausible pattern rather than confirmed fact. ETF applications in waiting. The move into regulated derivatives often precedes ETF filings. While no XRP spot ETF has been approved yet, multiple issuers are rumored to have filed or preparing applications. Some sources now place mid-October as a decision window. Whether the SEC grants those or not isn't confirmed, but the speculation is real. Bank charter ambitions. Ripple's National Trust Bank Charter application is publicly confirmed. This would allow Ripple to act under federal banking oversight and potentially maintain a Fed master account and operate stablecoin infrastructure more tightly integrated with the U.S. financial system. Of course, the application is under review and not guaranteed to be approved. Opposition has already surfaced. The Independent Community Bankers of America, the ICBA, publicly opposed Ripple's application, warning of regulatory systematic risks. The ICBA, still, the act of applying, seeking legitimacy, tells us something. This isn't hype, it's ambition. Now let's explore scenarios grounded in possibility. Picture this. The SEC approves one or more spot XRP ETF applications. Still speculative, but increasingly discussed in crypto circles. At the same time, Ripple's bank charter is accepted, granting it new powers, access, and regulatory trust. If both happen, the landscape could shift dramatically. XRP becomes a bridge between traditional finance and digital assets. Institutions hold it as liquidity collateral or treasury reserves. Payment rails begin integrating XRP as settlement rails rather than just speculative tokens. The credibility gap shrinks. XRP might move from niche crypto lists into mainstream financial instruments. Would the price explode? Perhaps. But more importantly, perception would change. Now the flip side. If the SEC rejects ETF filings or the bank charter is denied, XRP could stay in limbo, still built, still used, but without the lever to push into mass adoption quickly. Either way, we're standing at the edge of a possible inflection point, and it's real, not fantasy. This is where the long game matters. XRP's journey mirrors the rise of transformative infrastructure, the railroads, the internet, the financial rails itself. Those systems took decades to build. Obstacles, drama, skepticism came in waves. We may look back on 2025 as the turning point of tides, the moment XRP stopped being ignored. Here's what I see. Risk is real. Nothing is guaranteed. Regulations, legal challenges, institutional caution, all are real hurdles. Time itself is an asset. Even if things don't break now, the groundwork is stronger than ever. Conviction is tested by patience. If you're investing, what matters is not just upside, but sustainability and control. Education matters. This space rewards those who dig into data, law, and infrastructure, not just price charts. So yes, everyone ignored XRP, but what's happening now suggests they may be waking up. And in the end, revolutions don't announce themselves. They show up quietly in laws and infrastructure, in custody, in trust. If you believe in vision more than hype, then this moment is one worth watching closely. Drop your take in comments. Which XRP development matters most? ETF, bank charter, institutional accumulation? If this video shifted your perspective, hit like, subscribe, and share with someone stuck in the XRP's dead mindset. Because credibility without vision is just noise, and vision without scrutiny is just speculation. Let's walk the line together. Stay curious, stay sharp. I'll see you in the next one. This opened your eyes? Smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.